Good evening, it's Graham Healy from Canary, Australia, New Zealand. Here's my favourite scientist there, Albert Einstein, and it's easy as 1, 2, 3, 4, 5, 6. I'm showing you now how to screen for trades and get good trades on solid companies. Now we're talking companies that have a market cap in excess of $1 billion. This particular company I'll show you in this video was worth its market cap is $28 billion, too big to fail. So the probabilities of doing trades, buying shares and or doing options trades is a higher probability on the big market cap companies. We don't waste time actually on the penny stocks. That's you'll lose money on that. But on the bigger trades, we've got a more let's say the probabilities of success in trades are greatly enhanced. And the other thing is that we're using the revolutionary AI software called Canary that filters 11,800 companies and well over millions, if not billions, of data points down to executive summaries. In this video, I will show you how to do them, and it just makes life a lot easier. You don't have to be a professional stockbroker with 20 or 30 years under your belt. You don't have to be a financially qualified accountant, not that that'll qualify them in the stock market, but basically you can be an ordinary person with the power of Canary. It's like having a professional stockbroker in your back pocket on demand. So enjoy the video. Graham Healy from Canary, and if you want to do a basic course, just go onto our website, $75 a week for 8 weeks, and then you've got a lifetime member to the website, and we can give you suggestions regarding trades and all that. And remember, always have risk management. We go into risk management as well. Okay, over to the video. Graham Healy, thank you for listening. Good evening, it's Graham Healy from Canary, Australia, New Zealand. Tonight, I'm going to show you how really simple it is to find trades using the Canary software. And I've entitled this lecture, and I've used Albert Einstein, which is my favourite image, to outline what we're thinking about here, because you don't have to be a genius to work this out. You just have to have the system to be able to find the right trades. Now, I've entitled this lecture as easy, Canary, as easy as 1, 2, 3, 4, 5, 6. This is what this is all about. So normally people try and find trades by guesswork, or they try and find trades by emotional hype that they see on maybe YouTube, or they might have some sort of app that's showing you the price is going up and the price is going down. That's absolutely useless, because the reason is that's gambling. The gambling is not knowing what the odds are, and when you're putting money onto a certain system, it could be just like throwing money at the races, and you don't understand the horses, you don't understand the background of the horses, you don't understand the horse history. You're just down there on Melbourne Cup Day putting a bet on just because everyone else is. That's how, well, I suppose you can have a flitter once a year, but if you try and make income out of that, you're going to go broke very, very quickly. So in Canary, we're systematic. We deal with data, not emotions, and that's what Canary is. It's a software that filters over 11,800 companies on the New York Stock Exchange and filters millions, and in fact billions, of data points into executive summaries. So I'm going to show you how that works in an overview fashion. And if you want to do the basic course, I'm doing the basic course there. It's only $75 a week for 8 weeks, and then you have access to Canary Australia, New Zealand website, where you can back refer to all the lectures I've done. So it actually can set you up in your own trades. If you want another stream of income, you can try and go the way of getting another job. You can do that at $25 an hour. That's what the going rate is. Or you can look at trades where you invest say about 150 US dollars, and you can get back 10x that. Could be 15,000, could be, for instance, the other day I did a trade in one of the automotive industries in the US. It was 150 to open up the contract, and within 24 hours it was worth about 500 US dollars. It's equivalent to 600 or 700 Australian dollars. So, that goes from 150 to $500 in 24 hours. It's possible. There's a lot bigger gains than that when you learn the different strategies. And then also you've got to look at asymmetrical risk. Asymmetrical risk means that we only buy contracts that our particular capital can afford, and we do it on an asymmetrical risk system, which means that we can have, out of 10 trades, we can have 7 losses and only 3 wins and still double your money. So the lecture on asymmetrical risk is on the website, very important one to look at when you're doing trading and managing your risks. Now, I'll just put that image down, Albert Einstein, or I might even leave him up there in the corner. But now we'll just have a look at, first of all, we'll go to Trade Canary. Now, we've gone through a filtering system to get to this page, and this page is a summary of HUM. HUM is a health group. It's called the hospice. It's in the hospital and medical services area, and Humania, HUMANA Incorporated, is a for-profit American health insurance company based in Louisville, Kentucky. Now, this is a fairly big company. It's right up there with the rest of them. And we'll just quickly show you how it's got a very, very positive uptrend happening right now. And its earnings are going to be reported. Now, today is the 27th of July. Let me just have a look at my little calendar here. And its earnings are going to be reported next Thursday. So that's very interesting. Now, just on this page on Trade Canary, again, depending what you look at is what page will come up. I'm not going to go into great detail here because I just want to give you an overview. The market cap on this company is 28 billion. Sort of, too big to fail, right? So we're looking at companies that have got market caps of over $1 billion normally. And, we can bring up the industry peers and we have a look at all the industry peers. I won't go there or just all their tickers, but you'll see HUM is here, 28 billion. The others were 2 billion. There's one here, United Health, is worth 254 billion. So, it's not the biggest player, but it's certainly probably on that page, which is the top. It rates as about number 2 or 3. So there's 79 billion. It's 28 billion. So that'd be number 2. HUM would be about number 3 on its peer group. That's important because we've got to know what everyone else in the industry is doing and what HUM is doing compared to everyone else in the industry, and we can show you that in a second. So then we go down here, and this is a 2-week chart. Very important. Now there are other chart systems that you can look at, but we just like to put this all on one page so you can, at a glance, see what's going on. Now, as you can see, HUM has come down from about a share market price of $500 odd there. It's got the dates and everything else like that. And it's now in what you call a channel, like a pulse beat. You can see that down here, and that started probably, according to that date there, around about the 4th of the 10th, October 2024. So this chart is I've just got up here, it's a 2-year weekly chart. So what does that mean? Each one of these candles that you see, the green and red, equal 1 week. You can get daily charts. I'll show you that later on. You get monthly. You can change the monthly. But normally we'll look at the weekly. Each candle equals a week. So it gives you a very, very good pattern over a long period of time. So this is, this particular chart started in 2023, August 2023. All these dates come up when you put your the arrow on the particular candles. Okay, now this is another very important chart which the inventor of Trade Canary, Eric, has now basically he is developing Trade Canary software. Every week he puts on, I might request something that members might ask, and he'll actually put it onto the interface. I won't call it a website. It's not a website. This is an interface over all the trading that's going on in the stock market. A website's just a brochure. This is not a brochure. This is actually the underbelly of the 11,880 odd companies registered on the New York Stock Exchange. So this is a data processing interface. That would be the best way you would describe this, not a website. So you see the blue line here? That blue line is all the averages of let's say the peer group averages of all those particular companies in that particular sector. And this purple line is actually HUM, the group here, what do we call it again? Humania, I hope that's pronounced correctly. So it's comparison on what we call a relative strength index, and I'll describe that in a second. And with these comparisons, relative strength goes from 0 to 100. They haven't written 100. What have they got up here? 60. The scale goes from 0 to 100. Now, when it gets around about 60 to 70, it will trigger sell signals. And when it's down about 30, that's 20, 30 odd, you'll see it's triggering buy signals. Why is it triggering? Like, for instance, we'll have a look here. That's the 4th of October 2024. And you have a look on the 2-year chart, which is this actually correlates one with the other. And you see that big red candle. That means a big sell-off occurred on the 4th of the 10th, 24. And boom, she dropped the relative strength level dropped dramatically. Now, why is that important? Because we can see that it's at the bottom of the curve. This is where to buy, at the bottom of the dip, so to speak, right? And then, of course, you could have made money buying on the bottom here on the 4th of the 10th as it went up to the top of the curve there on what's this one up here? That's the 29th to the 11th. So from the 4th of the 10th, 4th of October to the 29th of 11th, so 4th of October, November, pretty close. So October to the end of November, it went on an upward trend, and then she pulled back, went on an upward trend, pulled back, went on an upward trend. She's pulled right back here. Now it's sort of sitting. It's sitting here. I haven't got a buy signal, but all the indicators are that it will proceed up to its previous strength levels, which is about a level 55, level 57. It gets up to the 60s, goes above 60, and she starts to trigger a sell signal. So it looks like it's up, probably to about there. Now, I'm not going to go into the details of how you read these charts, but they're very, very important. And the important thing is that you have this on one page. I mean, to try and you do this the old-fashioned way, good luck there. You'd have to be a stockbroker for 20 years to be able to understand it. So you don't have to be a stockbroker to have the Trade Canary software or do our basic courses. We cut through all that and just get to the bottom line. So all you want to do is, if you have a small account, that you want that account to make you money, basically you want the data to be able to process it effectively without having to be a nuclear scientist to figure it out, or being, where have we got here? Sorry, I'll bring you up again. Or being Albert Einstein. You don't have to be Albert Einstein. Actually, I've got a med science degree, and, my favourite person, of course, in the scientific fields is Albert Einstein. But you know what? Albert Einstein was very creative, even though he a mathematical genius, and quantum physics and all the rest of it. And I've done quantum physics with, through getting qualified to do X-rays and all that. It's quite difficult, but Einstein himself, he operated out of his imagination more than anything. So, even though he was brilliant, of course, he had an IQ of, I don't know what his IQ was, certainly above all of us. But he used his creative imagination more than anything. And that's how he came out with the formulas on relativity rather, and space and time and all the rest of it. This came straight out of his imagination, and he correlated back from there. Okay, just a little bit of a side issue there. Now, as we go down the page, the executive page here, we see we've got the options. So what happens is that the founder of Trade Canaries just put the options in one chart rather than trying to look at the confusing charts you see on most of the trade data. It's like all numbers everywhere. It's just enough to confuse everyone. So we keep it very simple. You see the blue, that means calls. The red means puts, even though we've got calls in green up there, but on the chart they're blue. So you can see it here. There's 280. There's 10 million in calls. You look here, there's 300. There's 3 million in calls. You go to here, 330 calls, or there's 5 million in calls there. So in other words, we've got an overview of where all the money's flowing to sign up the contracts to do calls and or puts. And obviously here, those lines there are very important. It means that the call purchasing, as you can see, the ratio there's 30 million. Is that million? Yeah, it's hard to read so many zeros sometimes. That's 30 million puts compared to almost 60 million calls. So in other words, the call to put ratio, the calls are double the amount of puts. So it's going in an upward direction, that means, in other words. Now, I won't go into great detail here, but just remember this one statement with Trade Canary: green on the screen, right? Green on the screen. Now, when you see these symbols green on the screen, that means they're in a positive direction, heading usually in an upward direction, generally, So when we go here, we have a look. This is the company quick view, earnings per share, and it's got there $11.58 per. The value of that, the value of the company is well, I'm not certain what that is. That's 1.37. How many zeros? That's a billion. 1.39 billion earnings per share. So we can go into that. I'll just do the overview. Now the book, we can go through that as well. Book value, I'll just read the top of it. These are all there so you can read it. Your book to price value is the metric the company compares the stock price to its share price and to its book value per share, right? So, and it compares with all the industry averages. All its peer group at the moment is sitting at about 4.83x, and Hum is sitting at 1.55. So, in other words, when this is green, it's compressed. When it's compressed, I mean, you can have a look at the formulas to these ratios. Basically, the percentages worked out on what I just said here. But the bottom line is that when these amounts are less than these amounts, which in other words, if Hum, it's sitting in a compressed state, whereas other industry peers are sitting in an expanded state, it is below the rest. That's what that means, right? Sales, so price to sales ratio is a stock valuation metric that compares a company's market cap to its total revenue or sales. It's 0.239. The peer average is 0.6, so it's what's that, about 0.400, and these are usually percentages, but they're ratios, and you've got to look at the ratios to what they mean and how they work them out. But as I say, to make it easy, is if it's green, it's yes, But if it turns red, it's a little bit of a caution, flag goes up. So the growth, this is an important one, the price to growth, the PEG ratio is a stock valuation metric that adjusts the price to earnings, PE ratio, by factoring a company's expected earnings growth. It is calculated by dividing the PE ratio by the projected annual earnings growth rate. And you can read the rest yourself. But in other words, this is a growth factor. This is a very important one here. They're all important. This is why I showed you this as an example. It's got green on the screen everywhere. So when we get to the charts, you'll understand this in greater detail. So then when we look at, we come down here, and this is the price history on the 9-week average, the 20-week average, the 50-week average, and the 200-week average, which is about 4 or 5 years. Okay, this is just the introduction, parts 1 and 2 of actually how to select trades through the Trade Canary software, and read the charts and all this sort of thing. The 6-point plan is available on Trade Canary Australia, New Zealand. Just join up for the beginner's basic course at $75 a week for 8 weeks, and then you have a lifetime access to the course, and it's basically got a virtual education course sitting on the website, and you will learn all these strategies so that you can increase your cash flow, obviously. Set up an account, and whether you're working or not working or retired or whatever, you'll have another source of income coming in, which has got tremendous potential. It's got more potential than putting money in the bank and all the other Ponzi schemes things. This is using the data analysis to get the right trades with the correct analysis through Trade Canary. Graham Healy over and out. Thank you for listening, and go to our website so that you can check out what we have available. Thank you very much. P.S. I forgot to tell you, don't forget to download my free PDF flowchart on earnings, the earnings strategy, and you can download that on the website. Graham Healy over and out. Thank you.